Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out my video. I just wanted to make a quick video today because yesterday I had a conversation with a friend of mine and it drove me to a couple points in my mind, and I just wanted to share those points with you. And I just wanted to talk briefly about a couple of the big differences between stocks and stock options, right? And this is super important, and there's some really key takeaways that I want you to pay attention to here. Stocks, first of all, everyone has to know, like, the game of the stock market is kind of stacked up against the novice, regular, everyday investor. Probably somebody like you who's watching my videos, right? You have to know that, number one. Number two, if the game is kind of rigged, you have to arm yourself with the most resources and the smartest things in order to flip those odds in over to your favor, right? And that's what I'm trying to help regular people do. Now, going back to the differences between stocks and options, so many people trade stocks and so many people lose money trading stocks, right? They buy stock when they're euphoric, they're excited. Oh my gosh, these stocks are going up and up and up and up, and they get so excited and they buy stock. And then what happens? It goes right down afterward. Do you know what I'm talking about? Have you experienced when you maybe got a cool stock tip from a friend and you got in only to find out, like, to experience, like, subsequently the stock going down? Oh my gosh, every time I buy something, it goes down right away. I've heard friends talk like that, right? So number one, a lot of times people buy at the wrong times. They buy when they're excited and the stock's already super high. Now, that doesn't mean don't buy stocks when it's high, so don't misunderstand me. But I'm just telling you why most people lose their money, right? So they buy when it's high. Then, when something goes down, they panic and they sell. Oh my gosh. You don't want to be one of those people. You want to have that Warren Buffett mentality. Warren Buffett says, oh my gosh, if it's the same company and it goes down significantly, buy more, load the truck up. Stocks in the stock market is kind of like one of those things. It's very different than everything else than you ever experience, right? So usually when you're shopping or something, let's say you go to buy a new car. I'll use that as an example. And you know what kind of car you want to buy. I want to buy a BMW M3. I love my M3, right? And really, like, the smartest thing is, okay, I like that car, right? And that car is the same everywhere I go. If I go to, I don't know, Beverly Hills BMW or Pasadena BMW or BMW of LA or whatever, I'm just making up names, right? It's going to be the same car, right? So maybe a little bit different options, but it's going to be the same car. So what do? You look for the best deal, right? Like, would you want to pay, let's say, I don't know, $70,000. I'm just picking numbers out of the air. Would you want to pay, let's say, $70,000 if you could buy the same BMW for $60,000? No, of course not. You would want to get a better deal. Same thing, like, if you go buy some new sneakers. I don't know, like, you want some Air Force Ones or something. Are they, $50 here or $55 here? Anyway, they're the same sneaker. I don't want to beat a dead horse. The point I'm getting to is stocks and the stock market in general is like one of those things that people, like, freak out when the stock goes lower. Oh my gosh, if it goes lower, buy more. And that's why everybody needs to sell options. I'm going to say that once more. Everyone, smart people sell options. Successful people sell options. And I'm going to tell you why, and I'm going to tell you a couple big differences that you have to understand. Number one, when you trade stocks, you have a paper gain or a paper loss until you actually liquidate or sell your position. It sounds confusing, but it's super easy, right? I'm going to go buy some Tesla stock. Tesla is an amazing company, right? And it's going to go from, $500 a share up to $800 a share. Oh my gosh, I made $300 a share. That's amazing, right? Okay, can you spend any of that money? No, you can't. You know why? Because it's a paper gain, right? You see that gain on your computer screen when you log in. You see that gain when you open your mail and you get your quarterly statement. Can you spend it? Can you go buy a car with that? Can you go shopping with that? Can you go skydiving and pay for your ticket with that? No, you can't. However, when you trade stock options, when you sell stock options, be very specific here, when you sell options, it's not a paper gain. It's an actual gain. So let me give you an example. And this is why everyone needs to sell options. You need to learn how to do this. Most people, like, you know what? I'm going to say, yesterday, a friend of mine was like, oh my gosh, Michelle, it sounds like dumb people trade stocks and smart people trade options. And I'm going to say I totally agree with that. Not to say I don't trade stocks, but you have to embrace this, take a little bit of time out of your day and understand this, because smart people trade options, I guarantee you. And let me explain something to you. Okay, Tesla. Tesla is a great company. They're amazing. Elon Musk, blah, 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 right? I'm just using Tesla as an example. Tesla is, how much is Tesla a share right now? I don't know. I'm going to look quick just so I kind of give you some good numbers, right? Tesla is $6.95 a share. It's down almost 2% today. I'm going to say $700. So Tesla is $700 a share, right? Number one, do you want to buy Tesla at 700, or would you prefer to buy it at 500? Raise your hand. Who wants to buy it at 500? Fuck yeah, right? Why would I? Tesla's the same company, just like the car, right? If I want to buy an M3 here, I'm going to buy an M3 here. Where's the best deal, right? If I'm going to ask you a question, if you had the opportunity to buy Tesla at 500, would you take it? Now, who's going to say no to that? Nobody. Nobody's going to say no to that. I'm looking at my screen at the same time that I'm talking to you, okay? So, for example, Tesla right now is 700, 694 and change, right? You can, let's see, I'm gonna look at my screen. I'm gonna talk to you at the same time because I want to give you real numbers. I want to give you legit numbers. Today is March 16th. Now, options trade every week. That means you have like the ability to lock in money and make yourself constructive cash that you can spend in your pocket like all the time. It's not like stocks where you have to wait to sell it. No, you take constructive, gain of your options when you sell options. So today is March 16th. I'm going to look at April 16th, right? I'm just going to go out a month. Tesla right now is $700 a share. Who wants to buy Tesla at 500? Hit me up. Say, yes, I want to buy Tesla at 500. Did you know that you can, now I'm going to use some terminology. Don't get caught up in the definitions. Don't get caught up in the terminology. Did you know that you can, let me think of how I'm going to phrase this creatively because I don't want to confuse you. Did you know that you can commit to buy Tesla if it drops to 500? And if it doesn't drop to 500, you don't have to buy it. But for that commitment to buy, that you're saying, oh my gosh, I, Michelle Kinney, I'm going to buy Tesla if it reaches 500 between now and April 16th, 1 month from now. If it doesn't reach 500 or lower, I'm not going to buy it. And for that promise to buy someone else's stock, if it crashes from 700 to 500, I am paid, $695. Let me say that again because you guys that don't understand options or you never took the time to learn it, you're missing the fucking boat. Let me tell you. I'm going to say it again and I'm going to make it like understandable. Tesla is amazing. It's $700 a share. Elon Musk is amazing. EV, electric vehicles, are the way of the future, right? Tesla's not going out of business. I don't think so. Like, I would bet my life on Elon Musk. He's a genius, right? And they're not going anywhere. If Tesla is a good stock at 700, it's a great stock at 500. It's an amazing stock at 100. Oh my gosh, if it went to $100, let me buy a fucking million shares if I can afford it. Let me go take out a loan against my house and buy some more stock, right? That could be the mentality. Now, in full disclosure, I want to make sure, that you make your own trading decisions, right? So don't hang up this phone and say, oh my gosh, I'm going to go buy Tesla. Tesla goes down, I'm going to sue Michelle, right? No, we're not doing that. I'm just providing education, and I want you to get excited on how these opportunities exist and how you can embrace them to make money. Let me go back to Tesla. Tesla's amazing. It's $700 a share. I'm going to sell a $500 put that expires 1 month from now. What does that mean? That means that I am promising to pay to buy 100 shares from Jane Smith over here that lives in Idaho or who cares where she lives, right? It doesn't matter. You know why it doesn't matter? Because the market matches up buyers and sellers. I don't have to go find someone to sell my option to. The market does that for me. Just like if I want to buy Tesla shares, I don't have to go find somebody to sell his shares to me, right? The market matches up buyers and sellers. We live in an electronic world, people. It's so easy, right? It's super, super easy. So Tesla's 700. I'm going to commit to buy Jane Doe's 100 shares if her stock crashes down to 500. Why does she want to buy insurance on her stock? Because she doesn't want to lose all her money, right? So sometimes people will buy insurance because they want to protect what they have. They don't want to lose it, right? So she wants to insure her stock. If her stock crashes from 700 to 500, she wants somebody else to buy it. She doesn't want to lose her own money. I'm going to be that somebody else. I'm going to say, Jane Doe, I'm going to promise to buy your shares of stock if it crashes down to 500. And guess what? Even if Tesla crashes to 400, I'm going to buy your shares at 500 because I'm just a nice person. That's the way the game works, right? Just stay with me. Jane Doe, I'm going to buy your shares of stock at 500, even if it goes to 400. Now, let's say, time goes on and Tesla stays 700 or it goes higher or it goes to 600. I'm not going to buy her shares. I'm only going to buy her shares if her stock crashes to 500 or lower. Now, where do I get that number 500? I'm going to pick the fucking number, right? Because that's the way the fucking market works. I get to choose. I want to say, okay, I'm comfortable buying Tesla at 500. I pick that number. I also pick the date at which the stock has to go down below in order for me to buy it. So that's like the time period, right? The expiration period. I'm going to say 1 month. I'm going to say between now and the next month. And I get to pick any date, like basically every Friday. I'm not going to get into details in the weeds. Just stay with me with the concepts, right? So I'm going to say, okay, Jane Doe, if your stock crashes from 700 to 500, even if it goes to 400, I'm going to pay you 500 for your shares. Now, for me, committing to buy your stock if it crashes, because I'm going to be like your insurance company, you are going to pay me $700, right? Check it. So I sell this put today. Let's say today, I don't know, it's 10:01 right now Pacific time. Market's open till 4 Eastern, right? So it's open. She pays me 700. 700 gets dropped into my brokerage account. Is that a paper gain or is that an actual gain? I'm not going to get into the details, but I can tell you that that's going to be cash that's available. So you can use that. You could go shopping with it. You could do whatever you want, right? I get paid $700. Now, between what am I promising for that 700? So when we sell options, like we have two parties, right? So we have somebody that's buying the insurance. They're buying a put, buying the insurance. I'm selling it to them. I'm the fucking insurance company. Who's smart? The people that buy insurance or the people that sell insurance? I want to be the seller, not the buyer. Don't ever buy options, people. That's a sucker bet. Maybe you might make money, but buying options is kind of like you're a gambler at a casino, right? We're not talking about gambling here. We're talking about statistically taking money. I don't want to say taking money from people, but statistically making money off of the fear of others. That's what we're doing, right? Jane Doe is afraid that her stock is going to crash. She's afraid of that, right? She experienced, I don't know, the tech bubble and the financial crisis back in 2007, 2008. She's afraid that her stock's going to crash. So she's going to buy insurance, right? I'm going to sell her that insurance. She's going to pay me $700. 700 goes into my brokerage account right now. Between now and 1 month from now, if Tesla goes below $500, I am going to buy Tesla 100 shares at $500 per share. If it goes lower, now the risk is, let's say if it goes to 400, I'm going to buy 100 shares at $500. So there is going to be a little risk. There's always going to be risk in the stock market, people. This stuff is not risk-free. If it was risk-free, everybody would be fucking rich, right? There's always going to be risk, but you have to weigh the risk, right? So here's what we have to ask ourselves. Do we think that Tesla is going to drop from 700 to 500 in the next 30 days? I don't know, maybe. It's probably not that likely. I can tell you from my brokerage screen that there is an approximate 7% likelihood. Where do I get that 7%? And it's not even relevant, and I don't want to confuse you guys. I don't want to make it more challenging than what it needs to be. But statistically, the people at the broker-dealers, they say, what's the statistical likelihood that it's going to happen? It's probably 7% in that neighborhood. Does that mean it's likely or not likely? It's probably not that likely because Tesla is a great stock and it's 700. I have to go down $200 between now and a month from now, right? It's probably not going to happen. Now, what if it doesn't go down to 500 or lower? Well, what if that happens? I still keep her $700 because she paid for insurance from me. How about when you buy car insurance and you pay $1,000 a year and you're buying car insurance because you want to make sure if you smash your car, somebody else is going to pay to fix it. And you don't have to fix your car because your car is fucking expensive, right? So you don't want to pay to fix it. You want to shift that risk off to somebody else. Now, if you don't smash your car, does the insurance company give you your money back? No, they don't. They keep it. So when you buy insurance, you pay for that and you don't get your money back. This is the same, people, right? So Jane Doe is paying me $700 to insure and buy her stock if it crashes. If it crashes, I'm gonna buy her stock at $500, right? It's $700 now. I'm gonna get a fucking good stock at a cheaper price. Duh, who doesn't wanna do that? And even if it doesn't go down, I still keep her $700. Who does not wanna trade options? That's what options are all about. That's why smart fucking people trade options. Stupid people trade stocks. I'm gonna say that once more. And give me some hate if you got some hate. I don't know. Hit me up with some comments. Tell me if you liked the video. Subscribe to my channel. I'm just kind of getting the hang and use of social media. I spent the last 13 years of my life doing things for other people. I did some things really great. I did some things not very great. But really now what I'm doing is focusing my time and energy on teaching regular people how they can beat the fucking system. That's what I want to do, is I want to teach you how you can beat the system. If you want to be a part of that, subscribe to my channel, like my video, please do that. But this is how easy, this is how options work, right? So if you can see yourself doing something like this, making $700, having that dropped into your brokerage account, and committing to buy a stock that you like anyway at a cheaper price, then say, Michelle, I want to learn more. Anyway, this is 16 minutes. I'm going to send this video to some of my friends, and some of my friends that have asked me recently, oh my gosh, how does trading options work? I'm so confused. I don't know how it works. Take some time out of your day, learn how to do this, and you will say, I guarantee you, down the road, you're going to say, oh my gosh, I am so fucking glad that I met that girl Michelle at a party, or whatever the case may be. Anyway, I'm rambling now. Happy, let's say Tuesday. Happy Tuesday. Happy trading, and I hope this video helps. Bye.